We are doing May-June 2020, paper 22, and it's a sum of marginal costing. Can you please read the question for me?
Yes, miss. DL Limited will soon be introducing a system of budgetary control. The directors are aware that this should be provided a number of advantages. However, they are not sure how budgetary control will affect the company's departmental managers.
Okay. So they are not sure about whether budgetary control is going to affect the managers. So what do they want from you? Theory.
Explain 3 ways in which the introduction of a system of budgetary control will affect the departmental managers of a business.
Okay. What did budgetary control help you to? What happens in budgetary control?
Miss, it'll decrease expenditures, so they will start saving more.
What happens in budgetary controls is they set targets. In budgetary control, targets are set due to which the managers get motivated. Okay, due to which the managers get motivated, their efficiency increases.
Yes, miss.
And their area of responsibility is very clear.
Okay, miss.
Area of responsibility is very clear.
Clear.
Okay, but it is expensive. And if you set a system of budgetary control, it might be restrictive for creative people.
Okay, miss.
Okay, so in budgetary control, you set clear targets so managers know what they have to do. Since they know what they have to do, the managers gets motivated, their efficiency increases, their areas of responsibility is clear. But there is also some disadvantage of budgetary control. What is the disadvantage of budgetary control?
It is expensive. Um, it restricts creative people, and
Okay, fine. Now, the B part of this question. Come on. Tell me, what have they asked you to calculate?
they've asked us to calculate contribution per unit.
How do you calculate the contribution?
Sales minus variable cost, and then you'll get contribution.
So you have the selling price minus the variable cost. What is your variable cost?
Direct materials, direct labor, and other variable costs.
So your variable cost is direct material, direct labor, and other variable costs. What is your selling price?
Selling price is 69.
Direct material?
Direct material is 1 second.
Then tell me the calculation would be
6.6 miss 3.30 into 2.
So it comes up to
6.6.
direct labor. Direct
It's 5.2 into 8.30, which at 43.16.
Other variable expenses
is 2.24.
So the total will be 52.
Yeah, it's 52.
Sales minus variable cost will give you what?
A contribution.
Contribution will be
17.
17. When you're reading this, I will read ahead also. Can you read the next part of this?
Yes, miss. The annual target profit for this factory. The factory's fixed costs are 374,000 per annum. The factory has the capacity to make 28,000 units per annum.
So I will
Is
just
normal.
keep this in mind. Capacity is 28,000 units in normal working condition, and my annual fixed costs are given to me 374. When I am keeping
Yes.
something in mind, it is for me to see when I'm reading the question ahead, they want me to correlate or no. Okay.
Okay.
Now there is additional information. Can you read the additional information?
The annual target profit for this factory is $50,000. During the year ended 31st December 2019, 24,500 units were made and sold, and the target profit was not achieved.
By how much is the target profit not achieved? Okay. So they are telling that actually initially they had to sell how much? 28,000 units. They had to sell 28,000 units, but they actually sold how much?
24,500.
So actually sold 24,500 units. The annual target profit was how much?
50,000.
Okay, 50,000. So by how much they have not achieved their annual target profit? Tell me, how will you calculate?
Miss, Miss, we have to find profit. We have to do contribution minus fixed
No,
cost.
but how will you achieve this question? By how much is your target profit not achieved?
Okay, Miss. Miss, first we have to find how much they achieved for 24,500
First, you
units.
find out your actual profit. Then you find out your target profit is already given to you. Yeah?
Yes, yes, Miss.
Compare your actual profit with your target profit.
Okay, Miss.
So then you will get by how much you have not achieved your target profit. Do you know the format of the marginal costing income statement?
Yes, Miss.
Can you tell it to me?
Yes, Miss. Sales revenue minus variable cost. You'll get contribution, and contribution minus fixed costs gives you profit or loss.
Okay. So I have already found out the contribution per unit, right?
Yes, Miss.
17. So my contribution per unit was 17. I
Yes,
will
Miss.
multiply it with the number of units that I have sold.
24,500.
What will I get? 416,500.
Yes, Miss.
Contribution minus what will I do?
Fixed cost.
How much is the fixed cost?
374,000.
374,000. So if I do contribution minus fixed cost, I will get what?
Actual profit.
How much is actual profit?
42,500.
What is my target profit?
50,000.
So by how much I have not achieved my target profit?
7,500.
Hmm?
7,500.
Profit not achieved by. Are you with me?
Yes, Miss.
Come on, let's go ahead. Can you read the question for me?
Yes, Miss. The directors are considering two options to increase demand for the product above the current level of 24,500 units. The current factory capacity of 28,000 units could be increased by a maximum of 20% by the use of the overtime. Overtime will be paid at 1.25 times the basic rate.
Okay, just hang on, okay? When I read my additional information, I need to derive some facts from it. Okay, option A, option B is the usual thing that comes in marginal costing. So my directors are considering two options, and they have two options to increase the demand. above the current level of 24,500. Okay. What is our
Yes.
factory capacity?
28,000 units.
So your factory capacity is 28,000 units. Whenever you read, you need to derive the meaning of it. Okay. What have they told you?
It could be increased by 20% with overtime.
So it could be increased by 20%. So how much is 20% increase? So you will do 28,000 into 120%.
This is 33,600.
33,600 could be your maximum. What it could
Yes.
be your maximum units that you can produce. And when you are producing this maximum number of units, you will pay overtime at 1.25 the basic rate. So you need to go and find out the basic rate for yourself, and this you will get it from the question. So when you are doing this, you are going to pay overtime. Overtime of how much?
20%.
So you are going to pay overtime of 20%. Can you calculate the overtime for me? No, overtime of 1.25 the basic rate.
Okay, miss.
So this is the meaning of the first paragraph.
Okay, miss.
So the basic rate is how much?
W-
How much is the basic rate?
Not sure, miss.
See? Basic rate is how much?
8.30.
Hmm. Overtime will be how much?
1.25 times.
Hmm.
It will be 10.375.
How much?
10.375.
Okay, so how much is extra?
It's 2.075.
Are you sure?
Miss, it's the overtime rate minus the basic rate, right? Yes, miss.
So your overtime rate is how much?
10.375.
10.375. And overtime is paid 1.25 the basic rate. Okay. So basic rate will be how much can I calculate now? It is 8.30 into 5.2. How much?
It'll be 43.16.
It is 43.16. And for overtime, you're going to pay 10.375 into 5.20.
Miss, it's 53.95.
It is 53.95. So for extra units that you are going to produce above 28,000 units, you are going to give direct labor at 53.95. Are you with me?
Yes, miss.
And the number of units, the maximum capacity, which is 28,000 units, you are going to give direct labor at 28,000 units. At 43.16. Are you with me?
Yes, miss.
So your factory's capacity was how much?
Um, 28,000.
Your factory capacity is 28,000 units. So for these 28,000 units, whenever you're going to give direct labor, it will be at the rate of
53.
43.16. Let me know that. Are you understanding?
Yes, miss.
The extra units that you are going to produce is how much? It will be 33,600 minus 28,000. So for this, your direct labor will be how much?
It'll be, miss, it'll be 5,600 into 43.16, right?
Your direct labor per unit will be 53.95. Are you with me?
Yes, miss. Understood.
The extra units that you're producing is how much? 5,600 units.
100.
This is the implication of your paragraph 1.
Okay, miss.
Are you with me?
Yes, miss.
So now the directors are considering two options. They have option A and they have option B. Are you with me?
Yes, miss.
And they want the annual profits. What do they want from you?
Annual profits.
The annual profits for option A, and they want the annual profits for option B.
B.
With me?
Yes, miss.
We will start with option A. Read the option A.
Okay, miss. First one is there will be a it'll reduce the selling price of the product by $3 per unit.
Okay. So the new selling price will become how much?
It'll be 66.
So 69 was our old selling price. So the new selling price will become 66.
66.
Okay.
Yeah.
Read the next part.
The demand will increase by 40% on 2019 levels.
Okay. What was the 2019 level?
It was
28,000 units.
yes, miss.
And they said your demand will increase by
40%.
how much it becomes?
It'll be 39,200.
39,200. But maximum how much you can produce?
33,600.
So maximum production can be only 33,600. So you will produce only how many units?
33,000.
33,600 units. Next.
Suppliers of materials will provide an additional discount of 5%.
So your suppliers of material, they are supplying you at how much?
2 kgs at 3.3 per kg.
So they are going to give you what?
A discount, 5% discount.
So this will become 3.30 into 95%.
Yeah, so it'll be 3.135.
This will become 3.135. With me?
Yes, miss.
Okay. So your new material cost will be 2 kg into 3.135. Yeah?
Yes, miss.
Fixed cost. What is up the situation about fixed cost?
Fixed costs will not be affected.
Now what do they want from you?
They want the profit,
Which profit?
the profit of option A.
Annual
And
target profit. Annual target profit of option A.
yes, miss.
Now understand, we are producing units, extra units, whose direct labor cost comes separately for us. Are you with me?
Yes, miss.
So what will I do is, I will make profit for two things separately. For normal production, I will find out separately.
Yes, miss.
For normal production, that is how many units? 28,000 units, I will find out the things separately.
Yes,
And
miss.
for extra production,
Okay.
production, I will find out my profit separately. How much is the extra production? Extra production is 5,600 units. Are you with me?
Yes, miss.
Okay, come on. Let's go ahead and I will try to find out my contribution for normal production. So the selling price will be how much?
The selling price will be 69.
66. Read. Yeah.
Yes, miss.
Minus what?
Minus variable cost.
Variable cost will be how much?
Variable cost will be 2.2 into 3 point. Miss, will be 6.27.
Sorry.
6.27.
Minus variable cost. This is direct material, right?
Yes, no,
Minus
directly.
direct labor. Direct labor is how much?
5 kgs
0.2.
into 5.2 into 3.135.
Why 3.135?
Miss, because that's the new discounted.
Sorry.
Miss, that's the new discounted price rate.
For direct labor, we've already calculated here above, right?
Yeah, miss.
For the normal one, it will be this much.
Okay, yeah, miss.
For overtime, it will be this much.
Yes, miss.
Yes.
Yeah, miss.
So direct labor is how much?
43.16.
Another variable cost is how much?
It'll be 2.24.
The contribution for normal units is how much?
This will be 14.33.
How much contribution?
14.33.
14.33. This is your contribution for normal units. Now find out the contribution for your extra production. Your selling
Okay.
price will remain 66.
Yes, miss.
Your variable cost will remain 6.27 for your direct material.
Yes, miss.
Your direct labor will be how much?
53.95.
53.95. Your other variable cost will be 2.24. So your contribution for extra production is how much? It will be
Miss,
6.
it's 4.74. 3.54.
Oh, 3.54. Yeah, okay, fine. 3.54. Now, when there is two separate contribution, you will always find the total contribution. Your contribution for your normal production is 14.33 into 28,000. So it's how much?
Miss, it's
What? 400,
40.
1,240. Now your contribution in overtime is how much? Contribution in overtime will be 3.54 into 5,600. So it will be 19,824. With me?
Yes, miss.
So what is your total contribution?
Miss, it's 421,064.
So your total contribution is 421,064. From your contribution, what will you subtract?
Fixed cost.
What was your annual fixed cost?
$374,000.
They had given it to you over here.
Yes, miss.
Your annual fixed cost is 374,000. So what will you get?
47,064.
So your profit for option is 47,064.
Yes, miss.
Okay. Now I want you to try your profit for option B. Before you go ahead on anything, I want you to try. Those who are watching the video will pause and try, and then we will work together. Our profit for option B. Okay.
Okay, miss.
Now we'll take option B. Okay. Read the option B.
Borrow 20,000 at an interest of 8% per annum to finance improvements to machinery.
Okay. So that means they are going to borrow how much?
20,000.
Okay. So they are going to borrow 20,000 at 8% per annum to finance improvement of machinery. Can you tell me which cost will increase if you are going to borrow money?
Variable cost.
Is interest variable cost? Does that depend on production?
Oh, no, miss.
Hmm?
No, miss.
Okay. So then what cost is it?
It'll be
It is
it'll
a
be
fixed cost. Interest is a fixed cost.
yes, sorry.
We already have one fixed cost that is 374,000.
Yes, miss.
And another fixed cost will increase 20,000 into 8%. That is another 1,600 will increase.
Yes, miss.
Okay. So you will borrow 20,000 to buy machinery. And when you're
Yes.
going to buy the machinery, there will be a depreciation of machinery at 20% per annum. Can you tell me how much will the depreciation of machinery will be? Machinery is for 20,000.
Okay, miss. It'll be 4,000.
It will be 4,000. Can you tell me depreciation of machinery? Is it a fixed cost or is it a variable cost?
Miss, it'll be fixed cost.
It will be fixed cost. That means if I go for option B, I have two increased fixed cost. One is the interest expense and one is the depreciation on machinery. Yes?
Yes, miss. Yes,
So if
miss.
I go for option B, let's go ahead now. Cost of the materials will be reduced to 3 per kg.
Yes, miss.
So direct material instead of 3.30, it will become $3.
Yes, miss.
Okay. So the direct material cost will become how much?
It'll be 6.
It will become 6. Very good. Advertisement campaign will be launched at a cost of 5,000 per month.
Yeah, miss.
So my advertisement campaign will become how much?
Miss, it'll be 60,000.
It will be 5,000 into 12. So again, additional fixed cost will be advertisement campaign,
Yes, miss.
60,000. The factory will operate at full capacity without the need of overtime costing. Now, this is a twist. Can you tell me what is the full capacity?
28,000.
28,000. And they will not need any overtime working.
Yeah, miss.
Are you with me?
Yes, miss.
Selling price will remain unchanged.
Okay, miss.
Okay. So this was over here. To avoid double calculation, I will take this things from what I have already calculated.
Okay, miss.
Okay. So for option B, this is the figures that we already have.
Yes, miss.
Selling price 69 minus the variable costs. What is the variable costs?
Miss, for direct material will be 6.
Okay, can I do it another way? I know my total contribution is how much.
Yes, miss.
How much is my contribution?
Total contribution is
17. This is under normal situations.
yes, miss.
Selling price is going to remain the same. Direct material will be cheaper. So the expense is going to reduce by 0.60, right?
Yes, miss.
So if expenses reduces, does the profit increase?
Yes, miss.
Understand properly. Expense is reducing. So the profit will increase.
Yes, miss.
So that means my contribution will increase by 0.60.
Yes, miss.
Okay. Why I'm doing this? Because the labor cost is also the same. Other expenses is also the same. So I
Yeah,
can
miss.
just add 0.60.
Understood, miss.
So if any expenses reduces, it will increase contribution.
Okay, sir. Okay, miss.
Expenses increases, it will decrease contribution.
Okay, miss.
However, selling price, if it increases, it will increase contribution. And selling
Yes,
price, if it reduces, it decreases contribution. So I could say the selling price and contribution work in same direction.
yes, miss.
And selling price and expenses work in opposite direction.
Yes, miss.
Okay, for contribution. Sorry, expenses and contribution work in opposite direction. Are you with me?
Yes, miss.
So my new contribution will become how much?
17.60.
So my new contribution will become 17.60. How many units?
28,000.
So what will be the contribution?
Miss, will be 492,800.
Sorry,
492,800.
minus the fixed costs.
800.
Okay. Minus the fixed costs. So
Yes,
we
miss.
have our normal current fixed costs.
374,000.
Then we have our interest. Yes.
Yes, miss. 4,000.
Interest is
16.
1,600.
Yeah, miss.
20,000 into 8%. Then we have our depreciation.
Yes, miss.
Advertising.
4,000. 60,000.
So the total fixed cost is how much?
439,600.
What is our profit?
It'll be 53,200.
53,200.
200.
So this is profit as per option B.
Yes, miss.
Okay. So I have my profit as per option A. What was the profit as per option A?
47,064.
47,064. And my profit as per option B was how much?
53,000.
53,200. With me?
Yes, miss.
Now, what is the next part they are asking us? Read.
Advise the directors which option they should choose, taking account of financial and non-financial factors. Justify your answer.
Okay. So if I choose option A, what is my
Yes.
normal profit?
47,064.
Normal profit that actually I earned.
Okay.
Check.
Oh, it's 42,500.
42,500. Okay. If I choose
Yes.
option A, what will happen? First you think, then I will come back to you.
Okay.
So advise the directors which option they should choose. Okay. Their actual profit was how much, Vayun?
42,500.
Actual profit was 42,500. Okay. Their actual profit was 42,500. The profit as per option A was how much?
47,064. 064.
See?
And option B was 53,200.
53,200. So if they choose option A,
Yes, miss.
financial and non-financial both factors you have to say.
Okay, miss.
So financial factor is it will increase their profits
Yes, miss.
and there is no permanent change in fixed costs.
Fixed cost. Yeah, miss.
Okay. They are not even changing their fixed costs and even the demand is maintained in case they are increasing the demand.
Okay, miss.
Yeah. So that means they are making the best use of the resources that is available to them.
Yes, miss.
For option B, profits will be higher for sure,
Yes, miss.
but there is too much of fixed cost that is involved.
Yeah, miss.
Yeah.
Yes, miss.
Profits will be higher, but too much fixed cost is involved.
Involved.
Also, there is no overtime.
Yes, miss.
Too much fixed cost involved and profits will be higher to financial factors. There is no overtime and no extra units other than their capacity.
Yes, miss.
Now, advise which option they should choose.
Miss, I think they should choose option A.
They should choose option A because there is no fixed cost, there is overtime, workers are being benefited.
Benefited, yes.
We complete our May, June, which paper? 2020, paper 22. Okay.